through a panel discussion. So right now we have a panel discussion. The name of the panel is Investment Management Panel. Innovative financial offerings for individual investors, exploring ideas beyond traditional offerings. It's a panel where we have esteemed panelists and they will share their wisdom on this beautiful chosen topic for you. I request people to please don't make noise because I think we can hear some disturbance at the back. So we are beginning our panel discussion. Our esteemed panelists are Mr. Deepak Jain, Founder Director, AAFM India. He will also be the moderator for this panel. Mr. Maulik Patel, Chief Business Officer, UB. Mr. Pallav Rajan, Founder, PMS Bazaar. Mr. Rahul Samani, Executive Director and Head of Investments, Integro Asset Management. Can we please join hands in welcoming all the panelists, as these are some of the best minds of the industry that we have for you today. Thank you so much.
Good afternoon, everyone. This is a panel on innovative financial offerings for individual investors. So, world of finance is constantly changing. New products are being developed, new ways of reaching clients are being developed, and we thought it would be an interesting panel to discuss what's new in finance and how will it change a normal investor's life. So, I'll start this panel by asking a very general question to all panelists. We are free to answer in any order. The question is, what is innovation in finance? How would you define innovation in finance?
I think it's a interesting question because we all love to hear innovation, right? Right from how do we chat to how do we do our daily life. From finance point of view, I think innovation is how the investment is happening and where it's happening. I feel right from where the money is going. We've got good enough tech companies where we all have started investing. That's an innovation. There's also an innovation of how we are transacting. The erstwhile way of doing a paper pen to today a tech-based where over 3 clicks our investments are done. So that's innovation for me.
Yeah, so my view on this, adding to what Maulik was saying is, one is about the technology bit that he said, and I think we are already in the transformation side and all of us moving to robo-advisory, digitalization, etc. Apart from that, I think most importantly, we are also seeing innovation in the underlying asset. Typically, traditionally, we were following equity, debt, or it would be real estate and gold. But today, there are various combinations to it, and there are newer asset classes that are getting added, and people have the appetite to consume them as well. So I think one is the platform used for the transaction bit, and the second is the underlying asset class, which is being innovative. So to me, those two are important factors.
Anybody else would like to add?
Check.
Yeah.
So for me, innovation is underlining. So basically, there has been a traditional way of investing and more of equity, and if it is debt, and it has been very limited to certain purpose. But now, when we mean innovation, it could be on private equity investment, it could be, and within startup, say if it is unlisted space, from pre-IPO and from angel, there have been, different category level. I think there have been a lot of innovation which has emerged over the period. So the underlining is what I mean to answer.
So adding on to what everyone has mentioned about, the innovation in the finance is also about the way we think about finance, the psychological part of it. We all think about finance as an investment on a conventional format. So in the current context, because of the availability of information, because of the confidence that we have on the changing landscape, people are ready to take that plunge of probably trying out other stuff, which probably till date were not part of the conventional investment portfolio. I think that's also an innovation in itself, because there are certain asset classes which we always thought about on equity, debt, or a real estate or a gold as the only universe of investment, which has also gone for a change. So it's also a pie of the investment which is changing, and that's an innovation which has probably brought in the current context.
Thank you. Namaskara, Bengaluru. According to me, innovation is something which simplifies. That is only innovation. And why I say that anything which simplifies is an innovation, because ultimately most of the investors around us, my sense is, whatever I gathered from my experience is that most of the investors, they want to reduce risk and they want to increase the returns, and they want to invest in a product which is understandable. So innovation of product which is simple, which reduces risk and which is easier to grasp is innovation. There could be another innovation which is more to do with technology. How do you transact? I mean, while walking or while having a coffee, if you can transact, that's an innovation. But that's something to do with service rather than product.
So wherever you talked about innovation being reducing risk and making the process easier. So could you give examples of what recent innovations where you see this happening?
Yeah, so see, if I talk about mutual funds or PMS, there are a lot of products which are being spoken. Like for example, we did one analysis at White Oak. And that's a very interesting data which I just want to share to answer your question. If somebody had for last 23 years, yearly rolling on daily basis for last 23 years, if you had a 100% debt portfolio, the standard deviation is about 7%, which means the risk is about 7%. You add 25% equity, risk remains 7, but your return moves from 7 to about 11%. And you add gold 20%, reduce equity a bit, reduce debt a bit, add just 20% equity. Another beauty that your risk still remains 7, which is standard deviation, return moves to 11.5%. So if a product which can get you best of all the worlds by reducing risk but increasing returns is, according to me, is a very good innovation to look at. See, prima facie at times it may look that anything which is very technical to understand is an innovation, but that's not the case. Anything which helps you take decision is an innovation, which I think a lot of industry players are working on. On the PMS side also, like long short funds, that's a very good product to look at for somebody who started. But then there are mutual funds who are working on private equity. There are people who are working on, various different products which are innovation. I mean, if I can take another 1 minute, a lot of people come and tell us that America में ये हो रहा है, America में passive funds बढ़ रहे हैं. But people don't know that passive fund नहीं बढ़ रहे हैं जितना money is moving towards private equity. That will be maybe another innovation which you will see in India.
So Vaibhav just mentioned a topic, long short. Can any one of you explain what is long short?
I'll take that.
Yeah.
So basically traditional investing, we all know that, long investing, you buy and hold on for a certain period and you exit. Long short is nothing but, basically we have both the position, one on the long side and one on the short side. Now the fund manager, will have some objective, and there could be different objective. Now say that hedging is one objective, and where they don't want to bet on any single company or a single sector, but however they want to participate and give a better yield than an sort of fund, FDs or a fixed income side. So this is most popular in India specifically, and there have been a couple of companies which are doing great in long short space, and there are few products which has been probably I will add into innovative products in a recent time, where probably some 50 to 100, 0 to 50% of the investment would go for probably taking a bet on single sector or single company. So they're trying to protect the volatility on the downside, and however they are also trying to capture the upside. So broadly, this is what long short is about.
So correct me if I'm wrong. In long short, you sell and buy at the same time.
Exactly. Yeah.
Right.
Yeah.
So you take both the positions simultaneously, buying and selling, and that difference is your yield, whatever you get. Right. The
You're right.
payout.
Yeah. Yeah.
Okay. Great. So there's another question which I wanted to ask all of you. Which financial product do you think would change the financial landscape of investing forever?
See, I represent UB and we are a fixed income platform. Obviously, I'm biased to that, but I think this will definitely change the landscape from the allocation point of view. This country had only one fixed income product, which we all know, which our grandfathers taught us, which was fixed deposit. Right? We have surplus money that goes into fixed deposit. I think fixed income is something which will really scale. Today we are just scratching the surface. And why is it's very simple. We all do debt mutual fund, but I think the allocation is low. We're talking about varied innovations into that. My friend just told long short, equity long short is very, very common. Just imagine today, we all have a view on interest rate cycle. It might vary by 20-50 basis points, but we all agree that it's closer to peak. Right now, can I do something where I can catch the peak? Not like a long short where I sell short term, but if I can catch the peak and sell it after 3 years when the interest rate cycle is low, you can make something like an equity return there. So fixed income is something where I feel innovation is there. It's still not eating up to a equity cycle. What I will definitely say is it's eating up to the fixed income or fixed deposit allocation which is used in this country. So that's one segment which I feel will definitely add value.
Yes, Mithun.
Yeah, I mean, can I just read the question again for me? Are you saying a
Question-
specific instrument?
Yeah, which financial instrument do you think would change or innovative instrument would change the financial landscape and the investment landscape going forward?
Okay, we're not specifically talking any asset class,
No,
I
no,
suppose.
no.
So I would say, I mean, we are all investment advisors and we manage portfolios of clients. So there is no specific asset class as such. I would assume that we would take bias to. Obviously, capital market is the one which is going to see scales and will really go leaps and bounds given the population and the number of people who are showing interest in opening demats and equity participation going up despite so much of money going out from the FDI and all. The domestic market has kind of kept the buoyancy. So equity is here to stay and it is just going to be scaling up. But I would say that there will be very interesting, like I am very tempted to say that there will be robotic tools which will come, which will make these combinations and create portfolios see, as an investor, a person does not know too much into what's going to do well, which of the asset class is going to perform well, etc. Right? So as investment advisors, we are the ones who are suggesting to them basis their risk appetite or the term of investment or the yield, the return expectation of the client. So those are parameters that we are measuring and then suggesting to them. So I think it would be good for us to use those tools which will be available by way of APIs or whatever. You have all these software as solutions today available, as a service available. So I think it will be good for us to technologically update and upgrade ourselves and keep that as our tool and then use it on our clients so that they get a fair exposure to each of these asset classes in a combined manner. That would be the best way to handle this, is what I would assume. Okay.
So the changing landscape, there are two elements which we normally don't see in the current context, is the risk measurement and tokenizing a particular financial instrument. I think these two products is what we have already seen in a REIT or an InvIT, which are probably new in the market currently, already a 5-year horizon which has already passed by them. But they are still with a stabilized asset and the cash flow. So you still don't have a risk-measured product which is there in the market. And if we look at the kind of investments which are required and where the larger part of the public or private money is required is at the real asset level. Now, while there are bonds which are available or you have your equity level risks which are available, but then how do the retail participants or the investors get that information on the risk? Can there be a moment of the return which is in line with the risk which changes over a period of time? Because what probably my risk parameters are going to be on a day 0 may be very different on day 180th and on 365th also. So how do you compensate the investor for those risk parameters changing, whether on the upside or on the downside? And at the same time, can I break it up into smaller pieces of units so that a fabulous example is when the REIT was first introduced, it was a product targeted towards HNI. Your lot size was 5 lakh and above. But today, after the regulator has realized that it is controlled and it is a well-oiled regulation in place, you have a single unit as a lot size, right? So I think that's where the landscape will move. You will have larger participants coming in. You will have the 20 lakh crore sitting in the saving and current account of individuals in India, which will probably move into the, a part of that will move into the market. Yeah.
Anything you like to?
See, my sense is that actually every product which is manufactured, there is an end use, right? There is some logic, there is some science. There is no product which has been made by the industry for any random reason. What is most important for one to optimize the return is to knowing self. If you know your need, then for every need there is a product. That's a bigger landscape actually where the entire industry should work on, which I am sure the industry is working on. But if I have to rate 1, 2, 3 that this is the best product which will change the world, answer is no. There is not even a single product which can change the world. But yes, if investors are getting to know their emotional behavior, they are getting good advice, and I think every product has a, and see what happens in country like India, with due respect, when there is some volatility, we assume that debt fund is the best product. अभी जब बाजार तेजी होता है तो ऐसा लगता है क्रिप्टो करेंसी बेस्ट है. That is the biggest enemy of any good innovative product. So knowing self, having a good advice, and understanding that for your every requirement, चाहे वो एक दिन का requirement हो या 100 साल का हो, there is a product available. Which one suits your profile is what you have to decide.
So basically what all of them are saying that there is no single product that would be changing the investment landscape. Each product has its own place, and you should find product which best suit your client's requirement. Okay, so now basically there is another question which they all relate to very much, and that is what are the innovation in product distribution which are happening today, right? And which may help them to move to new markets, new customers, better service clients. So what are your takes on that? How distribution is changing and what innovation is taking place in product distribution per se?
Yeah. So I think AI and ML is playing a very vital role, not only in the reach, but also in enabling ease of transaction and advisory. So it starts from digitalizing the whole thing, the entire journey of a client, from onboarding a client to transaction to reporting platforms, and then to remodel, rebalance. So everything is available on a click through a robo-advisory. How it will help, I think that's the way forward. I would somehow believe that distribution, see now if you see the millennials, I think my rough estimate would be 6 to 7 out of every 10 millennial should actually be using some robo tool or the other. Whether it is direct equity buying stocks or even mutual funds, they are using it in one way or the other. They may be using an individual financial advisor for other instruments, but BAU, conventional products, are today now being consumed by millennials through robo-advisory services. So I think that's the way that it will go forward. So 15 years down the line, if you will look at who are the people who will become wealthy people, rich people, where there were various definitions to it. These are the guys who are going to go there, who will have a lot of money, right? And then if this is the behavior that you are seeing in them now, and that's what they're going to inculcate, lot of other complicated products which are not available online today will also go there. PMS Bazaar was never existent. PMS was always a offline offering to a client, but today somebody has made a platform available, right? So I'm saying everybody is moving towards everything being technologically driven, and I would say that is the game changer. How we as individual financial advisors are able to adapt to this new technology and bring it to our benefit. Because most of the time when we are looking at research analysis that we are doing and all, we are either picking up a value research or a Morningstar and then taking those services. Today that's also available on an API. So I think if we are able to adapt to technology, we will be sustaining. Otherwise, I think millennials don't want human faces. That's what I would believe.
Yeah, I'll see broadly. I see there are. So broadly, there are three levels, being it from a distribution side or even an advisory side. one is pre-sales,
Right.
and in the mid-level there is a sales, and there is a post-sales, right? I
Right.
mean, this is what broadly covers. Now, if you go back 5 years, 10 years back, it's pretty difficult to have a platform where it gives all access at a single level. And today, the innovation I've seen that, if it is a pre-sales for a potential client, there have been a lot of analytics has to be done. And, as Madam has mentioned about robo-advisors, so everything is available now. That is one innovation I would see. Second, while onboarding the client, it was very cumbersome process, I would say, but today it has become very heavenly experience. In a click of a button, client can onboard now. And third, after investing again, it's been very difficult to service the client to get that the data from the asset management company and so on. Today it has become pretty easy, right? And all are available at a single platform now. And I see that as an innovation.
Anybody would like to add?
Yeah, so distribution is again evolved into a specialized service today. Just like you have a doctor or a lawyer. Because you have information, or the investor has information available through the robo-advisors or through fintech channels where the information is easily available and accessible. The advisor today in the current format, the distributors, they are more like partners. It is about sitting across the table on an overall basis, planning for the investor, and also appraising the investor about the other newer aspects which are available in the market. So I think while the technology has probably enabled certain of those information requirements, but it's an augmented information requirement, which also makes the distribution and the advisor's job all the more challenging. But I think that's the evolution of the industry which we are looking at currently.
See, when I meet a lot of advisors from across the country, there are 2-3 signs which I am seeing, which is very interesting according to me. One, I think most of the advisors who are growing, they are growing because their whitelisting process is very, very robust, in the sense that they don't just go and onboard any mutual fund, any PMS for that matter. So any growing advisor, one is asking right questions, that which product will fit into his set of customers, and those products are getting sold. So that's one sign, so to see, that which all partners are growing and on what basis. Second, what I see as a manufacturer, that when I go and sell a product to an advisor, most of the advisors are actually now looking at multiple products rather than trying to scale on one single product. So when I say advisor, it could be a bank, it could be a national distributor, it could be RIA, it could be an individual also. So the key signs of all these guys are on these contours which I spoke about. That one, they are asking good questions, they are trying to onboard right products, they are selling multiple products and not relying on one product. Service standards are going exceedingly high, that whenever markets are high, there is a communication which is coming. Whenever the markets are volatile, more communication is coming. I think those contours are really helping all these advisors to grow. Rest all points, all these guys, all my co-panelists have covered. So I thought I'll share what I observe when I meet a lot of advisors across the country.
So now we'll go to specific asset classes. So first asset class where we like to know what new products are being developed is debt. So in fixed income, what new innovative financial products are being developed?
See, as I said, fixed income started with fixed deposits. Today we have host of options. I totally agree to Weber, in terms of when we as advisors go to our clients, I think what we need to keep in mind is what is good for the client. And in debt, we have multi options depending on what our clients can take and really value add. Right from a short term, fixed return kind of a product. In fact, in debt, we've also started getting products which is like a duration kind of a product where it has an alpha to create. We can have a long-term debt market product. The biggest innovation in debt which we all have got is P2P, where we all can invest our money on a platform where you can get returns which is as low as 15 days to 30 days at a OD kind of a facility. That's innovation in debt which we've got. So debt no more is a plain vanilla one product fixed asset class, if I may put it.
Anybody would like to add something?
Yeah, I'll add from my side. So there have been, in alternate space, there are plethora of fixed income product which is available. From commercial real estate to residential real estate to venture capital funding. And today we see that there is a warehousing is one innovation which has come in. And there is one few apps like which have been funding to OTT platform. And so there are plethora of underlining, which comes with fixed income opportunities at AF space.
Right.
So the other space which is coming up is the managed assets, wherein the investments are more curated and very sharp and focused investments, wherein the risk factors or the elements of surprises, they are known beforehand, so that your mitigation strategy is all the more planned out at the very initial stage. And while these investments are, again, as under the current scheme or the regulations of the country are followed through alternate investment fund, because of the maturity of the investor class category into it, at the same perspective, if you look at from the managed assets theme itself, your elements which are going to influence your outcome are well documented on day zero, which makes your output all the more in a controlled environment. And from a portfolio management perspective, if we look at it from a variance control, this helps out in a big way, wherein your basic amount of, let's say, a coupon which is there on a debt instrument is taken care of. At the same time, your upside sharing also comes along. So the managed assets has the element of debt as well as equity flavor which can come along, and as the new instruments which are coming up in the market, probably that's something which is evolving. And
Rahul, sorry to interrupt you. What is managed assets?
So managed assets are ones wherein you are underwriting the asset. See, there are special opportunities wherein you have, let's say, an infrastructure project or a residential project with which cannot be a cookie cutter, wherein you'll have to probably design the plan. It may have all the benefits or all the attributes of a great instrument or an investment with the right amount of a cash flow mix, with the right amount of security cover, with the right amount of capability on ground to deliver the projects. But then, because of certain requirements, you have to design or curate a customized format for each project. Now, that's what we call a managed assets. And here, the fund manager plays the role of the asset manager also, wherein it's not only about the investor's money being protected in the most optimized format. At the same time, the investment optimization through quick churning and through better realization is also what is a key factor. So that's where the managed assets.
So how is it different from a REIT?
So under a REIT, because it's already a stable product, your horizon is already known. Your upside potentials are limited to a great extent. Whereas under managed assets, which are typically your working capital or early stage or special situations, you have other factors which, on bringing in efficiency, you can create opportunities of upside which can give a much higher risk-adjusted return to the investors.
Great. We have something in debt in mutual funds which we are doing, which is innovative.
See, not that, but मुझे ऐसा लगता है that there is a good opportunity for products which can help you give exposure to best of all the worlds. You know, when I say best of all worlds, basically multi-assets, so debt, equity, gold. Like a lot of our investors have not invested in, they have invested in physical gold, but not in financial goals, financial instruments, foreign equity. I can tell you that the exposure to foreign equity is very, very minimal. It is by virtue of our love for our country, we end up investing a lot of money of ours in India. But we also need to know that the markets which are outside India are also growing phenomenally high. Like I am sure a lot of our female colleagues who are sitting here, they must be in love with brands like Louis Vuitton, which is doing exceedingly well, as an example. But then how many of us have made money by those kind of businesses? Or Apple, which is the product I am sure in everyone's hand today. But how many of us have made money out of investing in those kind of stocks and countries? So my sense is, Deepak ji, that products which will invest in multi-assets, they will do well. That is one. And second could be on the fixed income side per se, I don't see any big change because industry has really come a long, long way. We saw target maturity funds, we saw FMPs, we saw credit funds and so on and so forth. I think usi mein betterment और होगा, but product per se, my sense is that multi-assets and global equity, these two we will see some innovation and some increase in those kind of products.
Okay, so another question is, if an investor wants to go for a innovative financial product, what advice would you give to that investor before choosing an innovative financial product, a new financial product, something which is not in the league or the traditional thing? So
I want to take this question. So if we really broadly look at it, and while we were discussing all these high-end exotic products that we have, these AIFs, under AIF you have so many asset classes, and PMS. So there are many instruments that we can offer to our clients. There are many underlying asset classes that we can offer to our clients. Right? If you want to broadly kind of categorize, we have equity, debt, gold, real estate, and now
alternates.
So alternates mein it's all a mix of
Right.
any one of these, right?
Right.
It's more an instrument
Right.
or an SPV kind of
Right.
a thing. So apart from this, there is a product which is under LRS. There are many products under LRS. While Vaibhav was saying globally you have these Apples of the world and Facebook and all where we use it, but we don't use it to invest it and make money out of them. But there are some very interesting. Recently I came across an instrument, a product under LRS called Life Settlement Fund. I don't know how many of you must have read about this product. So interesting. In dollar terms, it's talking about 14% to an investor. I thought, and it's an open-ended fund. Of course, more like an alternate investment. But look at the underlying. It is about some insurance policy holders in the US, right? And then you buy the policy, you become the beneficiary, you take the face value at the end of the maturity, and you make 12 to 14%. It is not market related, and there is an exchange, there is a regulatory body managing this. It's such an interesting instrument. While we talk, so there are so many like that. Like Maulik was talking about P2P. Under P2P, you have where do they lend money, and you can choose that. There are people. What is P2P basically? Like you're investing in Bajaj Consumer, for example. White goods bech rahe hain, and you're taking loan. It's as good as that, as retailish as that. While bigger banks lend to Malyas of the world, and this P2P lends to you and me, who are more credible, So that's the difference. But P2P is still not picked up as much popularity as any other fixed deposit. It's earning as high as 12% for somebody. And it has evolved as a product over a period of this last, I think, almost 10 years now since that product has come in. But then, conventionally, all of us somehow feel that if it is debt and equity, then it has to be typically mutual fund or direct equity. Now that is not the scene. People have started to see, they have more information, so if we are not going to be relevant. So it is about first categorizing the client as to does he have the wherewithal and does he have the understanding of those kind of asset classes, instruments that I can talk. First of all, I need to be knowledgeable. I need to know every instrument, whether I sell it or not, I need to know because they are going to ask me. And then if I have to evaluate between A, B, and C, whatever I am saying, I need to know all the three, right? So I think the advice to all of us as investment advisors is that knowledge is the key, that we should know every instrument, every asset class that's there in the market. It's available in public domain. We need to take interest and self-study. Once we know everything, then we put it on table. When we go to very savvy customers, then it is for us to talk. Ultimately, we may end up selling debt mutual fund, equity mutual fund, our corporate FD, the same conventional stuff. Keep it simple. We may end up doing that. But then talking to them about a P2P or a life settlement fund or any other LRS opportunity will make them know that you know more than them. And I think that's going to be the differentiator. Because we are going to deal with informed customers, very knowledgeable customers. So if we are not going to be acing up in terms of knowledge and skill set, then we lose the game. That's what I would say.
Anybody would like to add something?
So just adding to what Smita mentioned, see the biggest challenge or the deterrent to the financial space is misselling. Because the investor is looking up to the advisor or the distributor to guide them. And it is not immediate basis that you are going to get your result or the investment outcome. But it's going to always haunt and it will always ensure that the investor never comes back for the further investment. So as rightly mentioned, so that education and the passing of information, whether it is regulatory, whether it is to do with the taxation, what kind of bells and whistles will come along with it. I think that information has to be transparently shared across with the investors when they are taking a decision.
I think they have covered very well, but from investor standpoint, I would say that investors should definitely take advice. I mean, though products are becoming simpler, but macro conditions and the factors which can impact markets are very, very complex, so to say. So, you know, many times we try to become Robin Hood investors. I don't think that will help anyone. The best way to grow is to ask questions, and second is to take advice. And I think that is true for advisors also, that ask questions and take advice, attend forums like these. I'm sure, and like Smita rightly said that, you know, you need to understand yourself first so that you can answer any question.
Yeah. Just a one-liner, if I may, that what's going to be the differentiator between a hybrid model, which is we and the machine, or only the machine, will be more knowledge in one place, along with human touch. Because they are going to be giving, you know, it is just going to be a quant model kind of a thing, right? So the difference that we are going to make is all the knowledge that this one piece can give, along with empathy. That empathy that robot will never be able to give. It's just going to be transactional. So if that knowledge piece is gone and only empathy is there, no good, because millennials don't appreciate empathy. So we lose the game. That's the only point.
Great. So that was actually my next question. What is the future of financial advice, and what will it take for them to stay relevant in this changing world, which is so fast innovating? We have AIs, we have MLs and all those things. Yeah. So anybody who would like to answer that?
You know, I'll give you an example. 10 years back, we all did grocery shopping through our Kinaras, right? And we used to go and buy. Today, I think 90%, especially in Bangalore, maybe 100%, we all do through app. That's the change. Have our Kinara stores gone out of business? Some have not. People have, moved to the genies of the world and started being, the dark kitchens of the world for Swiggies and change the business model. Something similar in advisory we need to do, which is actually that change. Adopt technology, understand, I agree to Smita, the ask from our end investor is changing. It's not only advisory, it's how that advisory is coming, which is digital, which is savvy, which is right to that. They will not spend 2 hours with you to understand the product. They will just spend 10 minutes with you where you have to take that mind share. So I think that's very, very critical in terms of how we do business. And for that, we need to change our mindset.
If I may just add, are you okay?
Yeah.
I don't want to overshadow the other gentleman here. But I'm just compensating that I'm the only female in the panel. Right. So my thing is, I think we are going to take it with a pinch of salt, that technology is here and that it's going to overrule us. That is the fact of the matter. I think 10 years from now, distribution in the current format will not be there. I and you will perish if we are going to be running it in the same format. I think we have to take it with a bitter, that's the fact of life. We've got to live with the Siris and the Alexas of the world who are going to outsmart us. There's no, do rai nahi hai usme. Ye mera manna hai. And so how, we can't compete them, right? Because they consume more gigabyte, whatever, tetrabyte and whatever in their brain. But what we can do is human is unique, like the finger print. Every human is different. You can't standardize. And that's what we can bring on table. You customize, they standardize. What is Robo all about? It's about standardization of offer, of your portfolio. It just groups all of us and says, this is one cult, that is one cult. I have an advice for this cult, this group, and this is how I'm going to do. But while that customization, that fingerprint is what we can bring on table with technology. We empower the client, empower ourselves, and use technology for our benefit. After all, we created it. They didn't create us.
So what she's basically saying, which suit fits better, off the shelf or the customized one? You have people who will give customized suits to people. Great. So with this, I'll end this session, and we can have the question. Oh, yeah.
Thank you so much for the wonderful discussion. It was quite engaging and a captivating panel discussion that just concluded. Sir, I request you to please throw questions to the participants, and then the same way we will do this Q&A round. So question.
You need to ask questions.
You need to ask question to the participants. Is there anyone who wishes to ask anything from the panelists? Okay, there is a hand raise. Mike.
This could be my perception, but in currency trading, currency market, what products and what innovation are we doing?
Currency market.
Foreign exchange trading, sorry.
Forex trading.
I mean, I'm no expert, so I can't comment on it. All I can say is that's a BAU banking product. I don't think there is any great innovation in Forex, but I can't comment on it.
I don't think there are any product which you are saying, whatever I understood, you are saying that currency depreciate ka arbitrage kaun khelta hai. I don't think there are any products. But yes, when fund managers invest in foreign equity, that is one of the considerations, that if I give money at say $70, and 2 years from now, if the currency moves to 60, what will be my gain out of currency? That's one of the consideration, but no product is there as far as I know. I may be wrong, but I have not heard of any product which is doing the currency arbitrage.
No, currency is broadly available, for trading aspect, on the derivative side, but not on investing aspect as such currently, because there is no expertise much in managing the currency. Now on derivative side, if you look, NSE has made a lot of innovation. Now, if you ask me, like 10 years back, there have been only 1 or 2 currencies were available, but today the plethora of currencies are available. And if you look at the underlining within the currency or a strike rate, I would put, there have been again many, strike rate has been created, and exchanges put a lot of effort to create a volume and that aspect. And if you look at the volume growth, and it is significant, right? So probably on the currency side, you might need to contact some expert on, probably from the exchange side or from the booking side.
Thank you so much, Sir. You're adding something, sir?
Just one thing. I think we have a session on be the CFO for your client. I think that's where currency helps you. Even if he's not manufacturing, he's an investor, has a daughter, son who's going to US after 5 years, that's the advisory which you can give from a currency. And then you can actually use that from a trading perspective if the size is, of that level. Maybe that can be.
Thank you so much to all the panelists. Only one question anyone from the panel can ask. Let them throw one question first. Any one question you can throw.
Any question?
Anything related to what we've just discussed.
If anybody can talk to me if you're offering LRS as a product to any of your clients, and if so, what kind of products are you offering?
So a big round of applause for all the panelists. Thank you so much for sharing your wisdom with us, and it was quite engaging and interesting. Thank you, everyone. Mr. Pallav. Thank you so much, ma'am. Thank you all the panelists. Thank you so much.